And I want to show y'all how to last through a recession and a depression by creating your own bank and building wealth through the use of insurance.
Welcome to the Uncle Dre Show.
Now in this video, we will discuss how to create a financial foundation that can help you survive through recessions and depressions again. Now, many of us heard of the saying, cash is king, but this statement holds true, especially during times of economic uncertainty. However, most people have their cash sitting in a bank account, earning little to no interest. So what if there was a way to keep your money in a place where it's safe, accessible, and growing at the same time? Now that's where creating your own bank comes in. Now by using life insurance, specifically again, index universal life insurance, you can create your own bank, a financial vehicle that provides liquidity, safety, and growth potential all in one. Now this strategy has been used by wealthy individuals and corporations for many years, and it's time for everyday people like you and me to take advantage of it. So in this video, we will explain the benefits of index universal life insurance, including tax advantages, flexible premiums, and the potential for market-like returns without market risk. And we will also discuss how to leverage your policy to build wealth and create a financial foundation that can help you survive through recession and depression. So you see what's going on in the world today. Now, I hope that after you watch this video, you will have a better understanding of how to create your own bank and use index universal life insurance to build wealth and protect your financial future. But before we get started, as always, this is not free. The cost for me doing all of this is that you like, share, comment, and you tell a friend and tell a friend.
If you love this Wealthy Child shirt and you want to get one for yourself, check out wealthychild.co, wealthychild.co, and also check out The Money in the Bag, which is a fun rhythmic book that's really poetic and it rhymes. That's a kid's book that teaches about credit, life insurance, a whole bunch. Or check out Stories About Credit. You have a story about life insurance, also stories about real estate, and much more. Over 30 books that teaches kids and families about financial literacy, real estate, life insurance, credit, taxes, and much more. Check out wealthychild.co, wealthychild.co. Get you a shirt, get you a book, and let's get back to this episode.
Branches first and foremost, IULs take advantage of the IRS Code 7702, which the federal government had determined to be a legitimate life insurance contract. It is used to determine how proceeds are taxed. Now, what does IULs give you? And trust me when I say, I wish I learned this in school, but it's cool because at least I get a chance to educate y'all. So, IULs will give you tax-free growth on your retirement savings. It also gives you tax-free income in retirement. You also get protection from the stock market crashes as well as market-like returns. You also get easy, penalty-free access to your retirement savings and the ability to act as your own financial company for major purchases and investments. But before I get into what an IUL is, which is an index universal life insurance policy again, let me break down the first word, which is index. Now, quick question. Would you rather invest in the red line or the green line? Now, the red line is the market strategy for the S&P 500, 401k, 403b, or IRA. And the green line is the index strategy where your market-like returns, but you are protected from market-like downturns. So long story short or short story long, the way that this works is you choose an index like the S&P 500 for example, but your money is not invested in the index. So it's not in the stock market, but you get the benefits of the stock market. So your money moves however the index performs, but it's based on the limit or cap and you set. So let's say you set at 15%. Now if the market grows to 20%, you'll only grow to that 15%. That's the cap. But the trade-off is complete downside protection from market losses. So just like you will have a cap, you will also have a floor of 0. The worst thing that can happen is that you get 0 interest. The market is downturn. In other words, you lose nothing ever. So let's look at this chart again. You can see how volatile the market was between 1998 and 2013, and you can see where I circle in blue where the market goes down, and you get 0 growth because that's the floor. Now, this is a comparison of market strategy and the indexing strategy at a 12.5% cap with a $100,000 balance with 20 years. And if you just went to sleep with the S&P 500 index, you would have made $153,000 more with the cap and full than just writing it out. Now, as I mentioned in my book, Nevaeh's Wealthy Insurance Policy, in which you can purchase at www.chosenwealth.com, there are only 3 vehicles to get a tax-free income. There's the Roth IRA, municipal bonds, and permanent life insurance, which can be in the form of fixed or index universal life contracts. Now, the difference between the 3 is risk, contribution limits, age restrictions, returns, how your money grows, income, R&D or required minimal distribution, fees, funding, access to your money, death benefits, and living benefits. Now, I need you to remember that IULs have no stock market risk, no contribution limits, no age restrictions. They're easy and penalty-free. They have market-like returns. Your market grows tax-free, no RMDs, and you get a death and living benefit. And you have limited fees if structured properly, because you really want to be careful, because there are very few agents who are educated on how to properly structure these innovative policies that is meant to structure the growth of your money. Or they do, but they make the policy in a way that optimizes the best benefit for the commission. So I want you to be very, very careful. Now, unlike an annuity, you cannot roll over 401k or any other qualified money into this account unless you pay the taxes on your qualified plan first. So you will be committing to a monthly or annual premium, and you will have the option to contribute a large amount at once to fast forward the process. Now, IULs require about 12 to 15 years to hold a reasonable cash value. Now, also, you may be asked to complete a health examination for completion of the application as well. But one of the key components of owning this policy is the ability to access funds to your policy tax-free. Now, if you're interested in IULs, you must know how loans work. So let's get right into it. When you take a participating lotto, your money never leaves your account. It continues to earn interest. So you earn interest on your money on the loan to yourself. This is how owning your bank works. Now, let's say you have $100,000 in cash value in your policy, and you decide to take out a $20,000 policy loan to buy a new car. And let's say the insurance company charges 5% on the loan, and the market went up 10%. That loan didn't cost you anything. In fact, you made 5% on the money you loaned yourself. Now, let's see how it works when you take your minimum distribution tax-free. Let's compare incomes from a 401k and an IUL. Let's take a 65-year-old who wants a $97,000 a year retirement. With a 401k, he has $858,000 in retirement savings, with an annual withdrawal with $129,340. And with that, he would have to pay $32,335 in taxes on that withdrawal in order for him to get that $97,000 a year retirement. Now, this isn't hard math, so you have to rewind it, don't feel bad, but pretty much in 9 years, he'll be running out of his money. Now, let's take the same 65-year-old with an IUL who has $709,000 in retirement savings. This is roughly $150,000 less than the other guy, and he takes $97,000 out annual income in the form of loan, which is tax-free, and he also keeps earning interest on the loans taken on his annual income. And he has $864,000 in life insurance death benefit. Let's say he dies at 100, he will have $3,395,000 in income, and his family will receive $3,036,000 in death benefits, all income tax-free. And he will also have living benefits in which the other guy doesn't have. Now, because this is a life insurance policy, you actually have access to the death benefit tax-free while you're alive in the event you have a chronic, critical, or terminal illness. And it also allows the death benefit to be distributed before death to pay for long-term care. Now, let's talk about why I promote correctly structuring your IUL policy and how to do it for maximum cash accumulation. There really are 2 ways to structure these. The traditional way, which really has a bad reputation because of the high fees, high costs, and high commissions. They used to be very expensive, and it made agents very, very high commission checks. But as you can see here, the bulk of your money goes to insurance costs and your cash value is minimized. The death benefit is what drives the fees. and commission and the cost of the policy are high. Some of the major differences between the traditional way and what can actually be done, if you know what you're doing, is all you have to do is flip this concept upside down. You maximize the cash value in your IUL and you minimize the insurance cost. You structure it this way and it reduces the administrative cost for your insurance because your death benefit is lower. So the commission paid to an insurance is lower. So let's speak of a hypothetical situation of a 45-year-old putting in $20,000 a year. Now pay attention to how the same amount of money is going in but can have a dramatic difference to the outcome of the retirement and the amount of commission that the insurance agent will make. Now if you use a typical structure like the red bucket with a level death benefit and no cash optimization, and this 45-year-old man is putting in $20,000 a year for 21 years, at the age of 65, he will have $523,609 of cash value, which is a $1.5 million death benefit throughout the life of the contract. And the agent who sells that is going to make about $27,000 in commission. So this guy is putting up $20,000 and the agent is making $27,000. Now that's a pretty nice commission if you ask me. So this is how these policies were traditionally structured. But check this out, if you lower the death benefit by $500,000, now look at what you did to the cash value. It increased by $141,532. And you didn't have to put any money into this. You had the same money but different structure. And in order to give you your $141,000, the agent only had to give up $8,000. In this way, it cost the agent $8,000, but you made $141,000. If you know what you're doing, it gets even better. You see, you have to use the increasing death benefit. And this is why financial literacy is very important, because you start with the lowest death benefit that the IRS will allow, and you set it up each year. So as your cash value grows, this drops the death benefit. So another $644,000. So we cut the agent's commission about $20,000 all in all. But look what it did to your cash value. You went from $523,000 to $811,000, which is almost $300,000. And this is all without putting up any more money into the policy. The only difference is you're using an agent who knows what they are doing. So this is one of the main reasons I wrote the Fay's Wealthy Insurance Policy, and I'm in a position to really point people in the right direction to really help get their policy structured correct. All I ask is that you tell a friend by sharing this video, liking, comment, and subscribing. Thank you for watching this video on creating your own bank and building wealth through the use of life insurance. In particular, Index Universal Life Insurance. I really hope that you found this information helpful and informative. And remember, the key to building wealth and surviving through recession and depressions is to have a solid financial foundation. So by creating your own bank with Index Universal Life Insurance, you can achieve financial security and stability while still having access to your money when you need it. So I encourage you to take the next steps in your financial journey by consulting with a financial professional and exploring the benefits of Index Universal Life Insurance. With this powerful financial tool, you can take control of your financial future and unlock a life of financial freedom. Thank you again for watching, and I wish you nothing but the best on your journey towards financial success. See you guys soon.